In latest breaking news, Wall Street slides again as the US forges ahead with 104% tariffs on China. We saw the S&P 500 down, the Nasdaq Composite Index down, the Dow Jones down. There was some early hope that there may be concessions on tariffs, but that didn't eventuate. In yesterday's video, I said it was absolutely vital to keep your eyes on the index futures, such as the S&P 500 futures, the Nasdaq, the Russell 2000 and the Dow. Now, the thing that we can see when it comes to the futures, we had a bit of a push up in the last trading session and then a dump like hell, as those concessions just vanished. They were never really there, but the market hoped they were, or they were going to be. So the initial surge in terms of stocks was over optimism over trade talks, but that faded, and so too did that bounce. Having been inside financial markets for nearly 4 decades, what I did when I was early on, I of course, just like everybody else, was addicted to the news. I needed to know what caused these things to occur. As I went through decades and decades inside financial markets, I wanted to get ahead of the news. And I found the fastest way to get ahead of the news is to look at what the news reporters look at, and that's what I show you each and every day. What I found over the years and across the time was that basically charts were reflective of what news reporters talked about. At times like this, a lot of people are just running for the hills, but not John Templeton. Now, who the heck was John Templeton? John Templeton was a mutual fund market maker. He created the Templeton Growth Fund, and that averaged 15% growth per year for 38 years. Obviously, he had a pretty good idea of what he was doing. Now, I'm going to share a quote with you that you need to pay a lot of attention to. Sir John said, "Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria." You remember when the Nvidia earnings came out, Jensen Huang said, I'm going to sign your, what? And people were saying, I think we just saw the top of AI. They weren't wrong. Now, what did Sir John Templeton say after that? The time of maximum pessimism is the best time to buy. Hang on a second. What does this guy know about creating, 15% on average returns for 35 years? He probably knows quite a bit. And the time of maximum optimism is the best time to sell. So what does all that mean? Sir John is saying, when you want to buy when there's blood in the street, when there's maximum pessimism. Now, is it maximum pessimism? That is the question. Let's find out, and let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome, and welcome back CTKS family. You can see in the past 24 hours in the past trading session on the US markets, they didn't look too crash hot. In terms of sector performance, all sectors were down 1.57%. The badly hit ones were consumer discretionary and materials. Energy was also in there. The best faring, which came down, were financials and utilities. Turning to the Fear and Greed Index of the main market, it's still stuck at 4. It's been at 4 for the past 3 days. Look at that. The Fear and Greed Index has been broken. The probability of a rate cut has come up to 53.5%. Yesterday it was 38.5%, so this is a pretty big movement up. Turning to the crypto market, and we know the crypto market cannot escape the stock market's gravity. We can see that Bitcoin is currently down 3.62%, XRP down 5.26%, Ethereum down 5.37%. When looking at the Crypto Fear and Greed Index, we can see it's currently at 19. It's showing a slight bit of optimism on that little bit of an optimistic bounce in the main markets in the past trading session. But to know if fear is leaving the market and optimism is returning, we must look more deeply than this kind of surface action. One of the best things I've found is to look at the underpinning sources that journalists would look at, and I'm talking about professional financial journalists. They would look at row 1, which is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and US oil. The key to just note here is the VIX. The VIX came up 11.39% in the past trading session. Now, if you don't know what that means, a very warm welcome to you, and you might like to smash that like button and subscribe, because we'd love to have you as part of our global family. The VIX is the fear indicator, and it indicates where prices are going. For example, if the VIX comes up, it means the volatility of the S&P 500 going forward is getting really choppy. And the more it goes up, the more probability that the S&P 500 can come down. Now, we've seen some very, very nasty price action just recently. I want to show you something down here. This is what the VIX has been doing. It is undeniably volatile. Now, if we look back, what we're trying to figure out is how bad has this actually gotten? There was the C19 crash, and here is the current tariff global trade war crash. They look pretty damn similar. Now, what is this? That's the GFC. You can see that the VIX spikes up and up and up and up, and when this happened, the markets just come crashing down. So what if you could be ahead of this? What if you could have already seen that the VIX was starting to gain momentum? Well, if you're inside the service and you're part of the CTKS global family, you already knew that, and hopefully you were managing your portfolio to a degree that you weren't too badly hit. There's one thing to know the path, another thing to walk the path. But as you go through life and as you spend more and more time inside financial markets, what you'll find is you get better and better at taking advantage of opportunities like this. And they are massive opportunities. Now, what I would like to show you here, even though the VIX was just going rollipping up the hill, gold has been just slightly coming down, silver coming down. Now, one thing to note, a lot of people say, well, when there's a crisis, gold goes up. Typically, it goes up before the crisis, and then when the crisis comes, it comes down. But we'll look into that a little bit later on. The row 3 indices, they're really, really important. These are the major stock market indexes. So the S&P 500, the NASDAQ, the Dow, and the Russell. But especially we want to look at the futures and look at them across different markets. So we can see right across the market from Australia to the Hang Seng to Japan's Nikkei, across to Europe in the DAX, we can see all of these indices are down at the moment, and I'll show you why that's the case. Now, MicroStrategy was in a really CTKS gappy area, and it's starting to fill that gap. We'll look at that too later on. What we can see, total crypto market cap has done relatively well. Crypto's been holding up incredibly well. But unfortunately, if you're doing leverage trading, you perhaps got wiped out. It's a lesson that we all go through. We all start with leverage because we think and we listen to Main Street influencers and they say, there's no risk, you can do really well. And yeah, only with knowledge. So that's something that we all go through. And if you've gone through that right now, my healing thoughts are with you. It's a really troubling thing to go through. We've all gone through it. You will become stronger on the other side. And when we look at memes, we can see some of the memes are still negative, but they're eking out a small gain. Now, when we look at row 1 references, this is what we need to pay attention to. There's a lot of green down here. Now, we don't want to see green in row 1 references because all these references point back to the major culprit, the VIX. And the VIX, as you know, sorry for this whiplash, is coming up like a crazy thing. Just like COVID, just like the GFC, just like so many crises before, it's really going for it. Now, when the VIX starts to curl over, you're going to see a bottom inside the markets, and that's what we're looking forward to. So the question is the VIX going to come down? I would strongly suggest you go to CTKSmethod.org and you just scroll down on the homepage until you get to Mastering Price Action. This is the cheat sheet. You can pick it up absolutely free. You can manage the forward capability of all of these 32 charts that comprise the cheat sheet. Now, what does it mean? If you see the VIX is going really strongly positive, you'll see the others going very strongly negative. That's your sign to pay a lot of attention to the markets. Just having this alone is worth a fortune in avoided losses. And like I say, it's completely free. The single most important trend line across every single market right now is this line. This is the line across the VIX, and the one thing that we see here, the VIX is still under a degree of support. That means it could come down and it could spike up again. If it spikes up again, we're going to see more negative downside volatility. But if it does something like this, we're going to witness at least, if not a bottom, a short-term bottom, and a very strong technical bounce. The thing to note, until this changes, we are in an uptrend on the VIX. This chart is on the daily basis. To members inside the service, all the service levels have been released, and I've done a video which is potentially the most important video you'll ever see inside the service for this month's video. One thing that we note, we always think from 3 dimensions inside the CTKS family. Other traders and investors can think in different ways, say only up or only down. We don't look at things that way. Price is simply always moving in a wave-based function. Now, you might think that I've drawn this line up and adjusted it to reach price. That I have not done. This particular line, this negative normalized price path, was drawn at the start of the month and has not changed. We draw these paths up to understand how strong price action is. For example, on the VIX, the normalized price path is down here, the VIX is all the way up there. That means there's so much fear inside the markets. And we can see currently that the DXY, the US dollar currency index, is following the negative normalized price path. As price is always moving in a wave, we must think in terms of 3 dimensions. These are structurally based lines. If it can't get above, it's going to the levels below. And we saw the US 10-year yield go positive in the last month and then start to retrace. Now it's put in pretty much God candles all the way up. This is the last thing that many people would have anticipated, especially in a sell-off, because when we get sell-offs, we just view the yields falling through the floor. We've seen something else occurring here. I want to show you an intercorrelation and interconnection, which is so vitally important. We've seen US oil pretty much drop off a cliff. Now, what is this particular line? That is the VIX futures line. You can see as the VIX has been spiking up, it's actually pushed oil down. So when I invert it, I align these 2 relationships with each other. So long as the VIX continues to come down, expect oil to continue to come down also. The question is intercorrelation enough to go through? No, it is definitely not enough. When we look at junk bonds is a critical row 2 measure. It represents risk on inside the markets. We can see this is risk off. In other words, people are selling. This is an inversion of the VIX futures. Notice this area here, how we had such a strong bounce and then followed by a bit of a dump here. Now, what does that mean? We hit incredibly strong CTKS structure down here, and that caused that technical bounce. So the optimism inside the markets was more technical than it was news-driven. And the news just found a suitable narrative. Looking towards the euro is currently following the normalized positive price path. Inside Level 2 Standard Certification, I teach you how to draw these paths, and it's all about structure. We'll come into a discussion of structure a little bit later on. When we look at gold, it's currently following the normalized negative price path. Typically, what happens in crashes, people get really scared, so they liquidate literally everything, including gold. And often, you get a run-up in gold just before crashes occur. And gold's baby brother, silver, really feels the pinch. It feels the pinch as gold sells down and especially as yields come up. It's got a double whammy. Also, silver is used in industrial production, so there's a triple whammy for silver, unfortunately. Inside this month's service video, I give you targets for sell-offs and also strategies for recovery. Across all the charts, row 1, row 2, all the way down to row 7. When we look at copper, copper was doing so incredibly well. People felt absolutely guaranteed that copper was going to the moon, and then guess what? It retraced everything, literally back to the start of the year. This is why trading plus investing is an absolute superpower. Every investor must learn how to trade. But why? It's not about trading, it's about reading intercorrelation, interconnection, turning signals, looking at how the different probabilities are stacking up inside charts. That will guard your long-term investment. Just pointing out to the service members, we can see US liquidity is starting to increase. That's not a bad thing to happen. Also, when we look at the S&P 500, currently, of course, it has been selling down. This chart is on a daily basis. Now, what was the cause of this whipsaw? It basically was because junk bonds had enormous technical support, caused a bounce up, but they couldn't hold it and it came down. Intercorrelation and interconnection, you'll find, is everything. And what one major index does, the others do, especially when it comes to the S&P 500 and the NASDAQ. We saw that technical bounce followed by a retrace. Now, is this hammering in a bottom? Well, it virtually depends on what the VIX does. We know the VIX is supported. We know it's starting to come down to that line. If it does an underside retest and comes down, which may take a couple of days to play out, if we're seeing something like that, yes, we could be looking at a local bottom, but I wouldn't suggest it's a overall cycle bottom, not at this time. Trading is your superpower right now. Stacking probabilities is a wildly important thing to do. When we look at the Russell 2000, we expect the Dow and the Russell 2000 to confirm the major market indices. Now, what are we looking at the current time? Are they confirming? Oh no, actually they're not confirming. And this is on a daily basis. So you can see here, we're actually made lower lows here. That doesn't confirm the support of a local bottom. Are we getting any confirmation signals through, say, for example, Apple, which is inside row 4? No, we're not. We're making lower lows here at the current time. Stacking probabilities is really important. Investors and traders typically want, well, more so investors. They want it's only going up. Well, if it's Apple is only going up, what happened here? Only going up. What happened here? Only going up. You get the idea. Price is just moving in a wave. This is normal. This is natural. This is what financial markets do. Now, if this is what financial markets do, and you only hold one position inside the market, which is the one that you want, I want Apple to go up because, say you're invested in it, of course you want it to go up. But what happens if it doesn't go up, if it comes down? What happens there? And you say, I don't know why that happened. I don't know why this happened. I don't know why this happened. As a trader, you'll know why. For example, let's just zoom in a little bit and invert the VIX. Now, what have we seen here? The VIX futures are just indicating what's happening with Apple. Apple going up while the VIX is going up, and let me just turn this across to an uninverted scale. If the VIX is coming up, Apple doesn't have much of a hope to come up because the VIX is really problematic. And you might notice there's a little bit of a lag. So if you're looking for a perfect indicator, VIX goes up, everything else goes down, it doesn't always play out from that direction. This is something that you need to be aware of as well. Hard and fast rules, they apply when people don't know what they're doing. You need flexibility. You just need to stack probabilities and to understand if the VIX is starting to come up, that is a problem. For example, just look at it here. So if you're an investor in Apple and you were holding on to Apple shares as the VIX was starting to climb, cut over, find structural support, ay caramba, you could have avoided all of this drawdown. And that goes to all stocks across the stock market. A lot of people say, oh, you can't time the market. Hopefully you can see that that is absolute and pure rubbish. Well, maybe not for them. Maybe they can't time it, but we certainly can. And you'll be able to too if you do the cheat sheet. MicroStrategy is perhaps one of the best indicators of why it pays to trade and also to invest. As MicroStrategy was coming down, there was a CTKS gap between this area and this area. This area was once structural support marked up by level 2 standard certification, and this was also structural support down here. But in between the two was literally a 19% negative CTKS gap, which meant the price could fall very, very quickly, and this is on a daily basis. Now, what we saw in the past month is it came down into this positive CTKS gap region, and then it rallied up plus 24%. Notice down 19, up 24, down 19, up 24. Guess what? Same thing is starting to apply in this month. If we start to see the VIX rolling over, expect that plus 24 to come to fruition. That's not a guarantee, it's just a stack probability. MicroStrategy is in a really good space for incredible volatility, both to the upside and to the downside. Another really important reason to trade: if we got a cascading sell-off like we got in C19, it would take Bitcoin down to 33,000. What is the difference between holding on if you just bought at that point and just hold on for dear life and manage to sell at the top of that next rally, which was 609 days later, or you bought at the around that bottom there and you held off and you sold at that top? It's exactly the same price to sell, and you put $100,000 into it. If you went all the way down here and you were lucky enough to buy at the bottom and sell at the top, and this is just an illustration because we're not planning on doing either, but it's got a really good percentage difference in between here and here. In fact, it's 1678%, but from here up to the same spot is 556%. So from there up to there, 556, from there up to there, 1678. Now, a lot of people say, oh, don't worry, I'll just hold on and I'll just, I'll sell it when it goes up. Now, what is the difference between these two scenarios? Hold here, sell there, buy there, sell there. Same sell, just different buys. The difference is $1.12 million. I think that's something to consider. Don't forget, the only reason that you invest is to make money. If you're investing to not make money, please don't invest. This point of time, I would suggest you do 3 things to keep an eye on the market. Make sure that you fill out the cheat sheet, and you can get it free from CTKSmethod.org. If you just scroll down a bit, there's a lot of videos here on how to use it, and you can get that official ticker list for the service right there. The second thing, if the VIX starts to just break under this trend line, that is fantastic. The VIX coming down will rally the markets. The VIX going up will tank the markets. Therefore, just like a weather forecast, look it up from a daily basis and see where it's going. All professional traders and investors will look at the VIX on a daily basis. And the third thing is, just keep your eyes on the futures. If the futures start to curl around and they start to come up, that is very good. As we've seen in the past, we know what that means. This point of time, I would suggest you do 3 things to keep an eye on the market. Make sure that you fill out the cheat sheet, and you can get it free from CTKSmethod.org. If you just scroll down a bit, there's a lot of videos here on how to use it, and you can get that official ticker list for the service right there. The second thing, if the VIX starts to just break under this trend line, that is fantastic. The VIX coming down will rally the markets. The VIX going up will tank the markets. Therefore, just like a weather forecast, look it up from a daily basis and see where it's going. All professional traders and investors will look at the VIX on a daily basis. And the third thing is, just keep your eyes on the futures. If the futures start to curl around and they start to come up, that is very good. As we've seen in the past, we know what that means. Have a great day or night ahead, my friends. And if you said 100 in the last video, you are absolutely correct. That is 100 times. 1% done on 100 grand gives you $1,000, and if you do that 100 times, you have $100,000 profit. So that's the power of just 1%.